Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone have a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch you feel, there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We had the Dow Industrials down 27, NASDAQ off 5, S&P's flat. Gold contract up $3.50, traded at $1,341 an ounce. Silver off 17 cents at $21.88 an ounce. Platinum up $2 at $1,440 an ounce. Copper off 2 pennies at $3.24 a pound. Light sweet crude off 85 cents, trading out at 101.97 a barrel. Bonds. 10-year bond up 12 ticks at 127.27. 30-year bond up 27 ticks at 133.22. King dollar down 40 ticks at 80.18. You have the euro up 5 at 137. And the yen is down 33, trading at 102.18. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay. So, cash S&P, folks. We are at 1843.44. Now, this is what you have. First high that was generated out there was December 31st. That high, 1849. Market pulls back a bit, 1815, goes back topside again, hits 1850, 84, couldn't handle that, goes sideways for 5 days. Then what do? You get down 110 S&P points with monster volume. We crawl all the way back up. So it makes a swing low on February 5th. High volume swing low, that swing low is at 1737.92. High volume swing lows, folks, get tested. This will get tested. What do? You march all the way back topside again. Last 5 trading days, we're at the highs, can't handle the highs, volume dies on the vine. We did 594 million. Yesterday was really the kicker. Yesterday, you got to 1858.71, got over the highs, didn't have the juice, closed under the highs. Today, wants to make a march into the highs again, couldn't handle it. What does that say? That says February 5th, here we come, 1737.92. Dow Industrials, we take a look at the Dow, and I can tell you, even by the way that we're trading out here today, the market tried to make higher price, folks. And when we go over some of the stocks inside the NDX that was driving it, it very well could have, should have, and all of the above, okay? Because, you know, a couple of these equities, Tesla in particular, had huge movement. You know, it sold off $10, but if it stayed up there, it would have had a shot at making new highs. Dow Industrials. The Dow, folks, is only at ice. The Dow is showing that, guess what? Can't get traction. The Dow had come down from that 16,588, goes south 1,200 points to the 13,340. This is just a counter-trend move that brings you into ice. NASDAQ Composite, different animal. What you have with the composite is this. Composite is at highs. Really sideways move out here today. The high of yesterday was 4,311. We're at 4,287, and 4,287 is basically over all these highs. We look at the QQQs, the NDX 100. What you have with the NDX 100 is that she got over the highs yesterday, went 90.82, couldn't handle a high, sold off the high. The number on, and this is just crazy, because the number on the Q, folks, the QQQ is 90.25. That's the number you want to gauge out on. That 90.25 is the high of October of 2000. The market's going into that. It's going to do, February is going to be shot by about 170 million shares. The real key is going to be, will it be able to close at the end of this week over 90.25. Gold contract. We take a look at gold. What we have with gold is this. Not enough juice. And this is, you know, gold continues to march higher. Another $4. You know, yesterday, gold got from 318 to 339. You're at 342, 1342 out here. Bottom line, you don't have the juice, folks. and the gold equities are not following it. So that's telling me that 1342, we get 1285 coming at us in the gold market. Now, bonds, check it out. This is good. The bond market is going to basically be the sneaker in the whole deal, folks. And the sneaker means it's going to sneak up on people, and it's going to be great for everyone because the rates are going down, and they're going down dramatically, not in a small way. If we take a look at the 10-year yield right now, we're at 2.7. The 10-year right now is set up from monster ABC up. The 30-year is also. This is what we did out here in the 10-year today. You talk about pressing with volume. We did 1.6 million contracts. That's big numbers, folks. And you're coming into your B point. Your B point out here has 1.6 million contracts. You did 1.64. Your B point is 1.61. So your A point on this is 122.25. Remember, there's 32 ticks in 1 point in the bond market. So 122.25 is your A point. 126.25 at 16 is your B. So it's approximately 3.5 points. That's going to bring us up to 128.50. But this is what ends up happening. Once you go over 126.25, guess what? Game is on for 134 in the bond market. Now, we take a look at the 30-year. So that's the 10-year. You take a look at the 30-year, and the 30-year looks to me like it's going to be the first one that's going to launch the B point. So the 30-year right now was up 26 points, 26 ticks rather. It did it with 370,000 contracts. Now, we at first off, the B point is 135.03. The swing high, and now I'm not going to count this, well, I'm not going to count it because the B point is February 2nd. But what you have is this. On February 2nd, folks, that was a 100% move of a move when we had come off the bottom of December. It was going into the October swing high. So what does that mean? Well, markets, the most move they can make without retracements is a 100% move of a move. So when you get large consolidations, what this was, that's a 100% move of a move. You backed off slightly. We backed off with dramatically lighter volume. If you want to see the type of volume you backed off on, it's just really cool. So you went higher in February with 390,000 contracts. You back down with 250,000 contracts. You start pushing higher, and we start pushing higher with 400,000 contracts, 370,000 contracts. This little baby is going to launch, and when this thing launches, you're going to see, let's see, $7 over. That's going to be a 141 30-year bond. And just to get you acclimated as to where that is, if I take a continuous contract and we put a continuous contract up, what you have is this. At a 141 bond, that's going to bring us up to ICE. Now, when we talk about ICE, that's where the Dow Industrials is right now. Is right now. So at ICE, it's going to take, you know, a lot of cause to break through it. There's no doubt about that. If you got to remember something, that the bond market had topped in July of 2013, right? Yeah, 2012. We go down from 2012, July of 2012, to January or December 2013. Okay? So, bottom line, it's a long time, right? You went sideways for 6-7 months and you get down. We're making our way back up to ICE, and we'll see how it attacks ICE. But when it does attack ICE, what you are going to see is that you're going to see that 10-year get down yield-wise. The 10-year, I suspect, will get down to about a 2.2. And that's a big move, folks. We got as low as a 1.6. It doesn't mean that it's going to get lower than that, but a 2.2 is a decent move. That's for sure. Dollar index. What do we have with the dollar index? What we have with the dollar index is this. The dollar index right now rejected lower price again with lighter volume. The dollar index has been in a consolidation since September of 2013. It's rejected the lower part of that consolidation each and every time it's down there. This dollar index wants to make its way back to this 81.52. We'll see how it attacks that area, if in fact it can get up and over that area. FSLR. Let's see. This is first sold. This always has a high volatility, no doubt. That closed at $58. That's trading at $51 right now. and numbers on First Solar go like this. The net sales was $768 million. The earnings per share was 64 cents. Bottom line is that they're selling that baby off. You stay right there, folks. We're coming right back.